You see, it's amazing that when we get a small pump in Bitcoin, just like a little recovery in Bitcoin, the altcoins go absolutely green. And today I want to talk about a whole lot of altcoins that are going absolutely green because of a big narrative in crypto that I'm not sure people are going to talk about. And I think we're bringing it to you rather early. And that is what we're getting an event. We're getting an event on Thursday, which is the Circle IPO. So you know that Circle, the company that produces or that is the issuer of USDC. Well, they are IPOing on Thursday, and there's massive demand for this IPO. In fact, they've had to raise their valuation multiple times just to keep up with the demand. Now, this is a massive event for crypto because it's going to awaken DeFi and it's going to awaken a whole lot of other protocols. And I want to speak today about the Circle IPO, and I want to talk specifically around which protocols and which tokens may actually benefit from this and how we can actually end up making money from what I think is going to be one of the biggest events on the crypto calendar. So if that sounds good to you, what I need you to do is subscribe to our channel if you're not already subscribed. And I think by now you should all be already subscribed, and then obliterate the like button, and then I'll get the alpha on the road. So let's get going, guys. All right, if you haven't subscribed, subscribe and obliterate the like button. Let's go. We've got a lot of alpha to talk about today. Talking about why we're getting a slight pump on Bitcoin. Also, why that slight pump is causing the altcoins to explode. And then we got to spend some time talking about the Circle IPO, because I think a lot of people are discounting how big this event may actually be, and why tokens like, if you look here, you can see Maker is firing. You got Athena, which is firing, and there's a lot of other tokens which may actually benefit from the Circle IPO, and we're going to spend some time actually talking about that. So let's get straight into it. I mean, I'm counting on you guys to obliterate the like button while I, of course, bring you guys the alpha. So here we are at about 105,000. Not much of a difference from where we were yesterday. As I said to you yesterday, I think that the reason why the market was running yesterday was because gold was running. And if you look at gold's broken out on the daily. And again, I think the reason why gold broke out on the daily is very much because of what's happening in Russia and Ukraine. So you know that Ukraine did this amazing drone attack against Russia. And now the world is on edge, waiting to see how Russia will respond. And one of the Russian heads of negotiation, he said, Putin's top negotiator, his name is Vladimir Medinsky, simply replied, "Wait for tomorrow." Okay, so he said they asked about how Russia was going to respond to the drone attack, the massive drone attack, the debilitating drone attack, and he said, "Wait for tomorrow." And so now markets are pretty much on edge. There's a lot of fear in the markets. And what you're getting commodities absolutely exploding. So you have gold breaking out now at 3,356. It was much higher earlier. It was at 3,400 a bit earlier. You got silver. I mean, just look at this green candle on silver, which is quite unusual for silver. And then you got 6% on silver. And then you got all the other commodities actually exploding on this Russia-Ukraine story. So you've got silver, copper up 4.61%. You got crude oil up. Obviously, oil going to be up in that region because of tensions in that region. Natural gas up 6.35%. So all the commodities up as a result of that attack. And I think in this case, Bitcoin has been lumped together with the commodities, and as a result of that, we're seeing Bitcoin up and we're seeing the altcoins going green. And I think the good news is that we're actually seeing the dominance continuing to come down. So I think you can pretty much say that's almost a retest of that trend line. And now the dominance continuing to come down, and ETH continuing to hold its own. So ETH is still at 2,615. And I see Solana is back at 160. So that's really a little overview of what's going on in the market. And it's not the main thing that I actually wanted to talk to you about today. What I want to talk to you about today is I want to talk to you about something that may actually only happen on Thursday, right? Or when the market may actually only wake up to it on Thursday. But I figure since today's Tuesday, it gives you time to watch the markets, watch the moves, and then understand whether this thing is something that you actually want to trade on or whether it's something that you don't actually want to trade on. So let's talk about what it actually is. as I said before, I think that BlackRock is very much involved in this. I think that a lot of the big names on Wall Street are very much involved in this. And that's why I wanted to bring you the story right now. So the story goes something like this. We all know that we've got the stablecoin issuer, which is called Circle, and they issue USDC. So right, everyone knows that. So the Circle company has been negotiating with both Coinbase and Ripple, and continue to negotiate with Coinbase and Ripple. But what they're doing now is they're doing an IPO on Thursday, right? So they're planning to do an IPO on Thursday. They're targeting a valuation of 7.2 billion, which is much, much, much higher than what they initially expected. And in fact, when we were offered the rounds were going around at 4 billion, then 5 billion, then I saw around at 6 billion. And now I see they're targeting a valuation of 7.2 billion. And it's a massive, massive, massive event, which is being bid up by Wall Street. And the reason why it's being bid up by Wall Street is because Wall Street want stablecoin exposure. And the reason why Wall Street wants stablecoin exposure is because they know that the stablecoin issuers are becoming a very strategic part of the United States crypto play, right? So when you look at the United States crypto play, we kind of know that one of the reasons why they are prioritizing the Genius Act, which is this act that is about to pass, the Stablecoin Act, one of the main reasons why this act is about to pass is because they realize that if the US wants to be dominant if the US want to be the stablecoin reserve currency, which is a very, very important currency if you think about Web3 becoming the new internet, and data and transactions being able to take place directly on Web3. The winner of the currency that owns Web3 remains the stable currency. Because what you can almost say is that in future, all transactions are going to take place on some kind of blockchain. And if you can become the most prominent, foremost currency in the Web3 ecosystem or in the Web3 domain, effectively it cements the dollar dominance position. So just like the dollar was dominant in Web2, if you position yourself early enough and you regulate yourself early enough, then the US dollar could have another era of being the superpower, the global superpower, and being the global reserve currency in Web3. And so the US knows that how important this is. And it also knows that through regulation, and specifically through this Genius Act, they're going to force stablecoin issuers to invest their money in short-term T-bills, in US T-bills. And by investing their money in US T-bills, effectively it creates a situation where the issuers, or the issuer of a T-bill, which is in this case is the United States, almost guarantees buying for the T-bill. So by making the dollar, by regulating stablecoins and by making sure that the reserves are backed one-to-one, which is exactly what part of this regulation says. So crucially, the Genius mandates for reserves to be one-to-one for stablecoin issuance. The reserve should consist of US dollars, insured bank deposits, and this is the next one, short-term T-bills, right? You can see it's short-term T-bills and money market funds comprised of the above. And so by regulating stable coins and by regulating them in this way, they're almost guaranteeing buyers for their T-bills. Now, we know that the US has been struggling with demand for its T-bills, and so the rates have gone up to entice new buyers to actually buy T-bills. And so what you're getting here is you're getting the Genius Act actually being passed. And because the Genius Act is so strategically important for the United States, the timing of the Circle IPO couldn't be any better. We forecast that this Genius Act is going to pass pretty soon. In fact, we hope that the Genius Act will pass before the summer recess from the United States. And if this passes, it'll be the first bit of meaningful stablecoin or meaningful crypto regulation. On top of that, so that's the American strategic play, right? But then there's also another strategic play at play here. And the other strategic play here is the BlackRock play. Now, we've all heard Larry Fink, and we've all, I think, heard voice clips which are similar to this one.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize strategies through tokenization that fits every individual. We would have instant instantaneous settlement. Think about all the costs of settling bonds and stock. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. If you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote.
So long story short, we know that Larry Fink has been talking about tokenization and immediate settlement. That tokenization and immediate settlement can't happen unless you have a currency on the blockchain, right? So long story short, if you don't have a US dollar on the blockchain and you don't have a regulated US dollar on the blockchain, there's no way that BlackRock can proceed with these plans, right? And so when you combine the Genius Act with the launch of USDC, and you look at the timing of when this Genius Act is going to pass and when the launch of USDC is going to happen, you kind of realize that there's a narrative that has to come into play here, right? And that narrative that has to come into play is anything to do with stablecoins, trading stablecoins, with DeFi, and with yields, right? That's the first part of it. But the second part of it is that if you look at the analysis around Circle actually IPOing, so this is written by 𝗙𝗪𝗪. He says, look, Circle will IPO, and that there's been massive demand amongst a lot of people. In fact, there's been so much demand that Cathie Wood and Larry Fink, so Cathie Wood wants to take $150 million of this round that they're raising, and Larry Fink wants to take a further $60 million of this round, which will account for about 35% of the raise, which is already very much oversubscribed, right? But on top of that, what we're seeing here, what we know about Circle is that Circle is a revenue-generating business, right? And it's a revenue-generating business around CeFi, basically. So effectively what you do with Circle is you give them US dollars, they give you back USDC, they take your US dollars, and they start to invest it. And they start to make a yield on actually investing it. And so what we're getting here is we're getting a TradFi company, a crypto TradFi company that resembles a DeFi company. Because if you think about what these DeFi protocols actually do is you give them your assets, they invest your assets, and they give you a USDC. And so what this IPO will actually do, it'll do two things. It'll give investors access to a play around this sector of stablecoins. But not only that, what it will do is it will create a relative valuation mechanism. In other words, when people compare the valuation of certain protocols, they'll be able to say, okay, this relative to Circle, which right now they don't have because we don't have a relative valuation, right? And so what we'll get now is we'll get something that TradFi and other funds can say, well, let's just compare it to Circle. Just like today, when it comes to exchanges, you can say, look, let's value it relative to Coinbase because there's a market valuation on Coinbase. So he says how Circle trades will have a large effect on how DeFi assets will trade. After all, one can justify a $5 billion valuation on Athena if Circle trades at similar levels. If Circle trades at above $10 billion shortly after the IPO, I believe it will lift crypto valuations for projects with stablecoin exposure and cash flows. And this is where I really agree with him. He says, for example, if Circle makes $157 million in net income in 2024 and trades at $10 billion, Maker looks attractive because on that basis, it trades on a $1.4 billion valuation, making $107 million. So all of a sudden, you've got this relative valuation criteria. And what we also know is that anything that is a protocol should be more valuable than anything that is a company, right? Because anything that is a protocol has effectively relies on network effects, and companies rely on network effects, but they also have management and stuff like that. So we know that there should be a premium for crypto protocols that can be compared to, for example, a Circle. And so, as I mentioned, right now the demand is very much off the charts. BlackRock are very much behind this, and they want to get a big chunk of the action. But of course, the offer is oversubscribed, and at the end of it, everyone will get their allocations, and we'll see on Thursday what everybody gets. If you look at the numbers here, when it actually comes to the Circle valuation, what you'll realize is that their enterprise value over revenues is expected to be 4, and their PE ratio is expected to be 40. Now, you need to look at this because we're going to talk about where the opportunity is. And in fact, where the opportunity is effectively looking at DeFi protocols that are either stablecoin related or that are revenue generating and earnings generating, and then using the Circle multiplier to see how these fare against Circle in the traditional world, and how the crypto world fares relative to the traditional world. And if there's a massive disconnect between the crypto world and the traditional world, one would expect that either the traditional world will go down or the crypto world will go up, back to this relative valuation. And that's why the Circle IPO is such a big deal. It's not about one part of it is about the fact that all of a sudden investors can get access to this very, very strategic market on a national level. But on the other hand, we now have a relative valuation mechanism between CeFi and DeFi. And I want to spend a little bit of time talking about that. So you've got Circle coming on a valuation of 40, and then you've got this dashboard, which shows you all the different DeFi protocols, and you can look at specifically at their yearly fees. I'm gonna sort this by yearly fees. And if you look at the biggest protocols by yearly fees, it's Jito, it's Radium, it's Uniswap. But I want to spend more time talking specifically around the things or the protocols that are relative to Circle. And I'm going to go back to Circle and say, look, they are trading at a EV times revenue of 4. In other words, 4 times the revenues should be equal to or 4 times the revenues is equal to the valuation, and 22 times the EBITDA that is equal to valuations. So what are the protocols that can actually, or that should actually benefit from this Circle IPO? So I've said this before, and I'm going to say this again. Probably the most important protocol in stablecoins, in my mind, is Curve. And I know a lot of people aren't really looking at Curve, but I really think that it's one of those gems that a lot of people are going to miss out on. And the reason why I say that is because I think very few people actually understand what Curve actually does, right? So Curve is let me actually just go here so we can actually see. I think it's CRV. Okay, so let me just go to the actual, I use this just to get the right website. So what is Curve? Curve is effectively a DEX. That's what it is. It's a DEX. But the tokens that you trade on Curve are not all your shitcoins and whatever else. What you trade on Curve is you trade tokens that rely on very little slippage between one another. So for example, one USD against another USD, USDC versus FXUSD, or wrapped ETH against another kind of wrapped ETH. You see how all the tokens in this protocol are actually very, very similar, right? Curve USD against USDT. All these pools are of assets that are very, very similar. And the reason why these pools are very, very, very similar is because Curve specializes in doing swaps with very low slippage. And the reason why that's such a big deal is because if you think of a world where there's going to be multiple stablecoins, what you want is you want a platform that can allow you to swap between the PayPal stablecoin and the USDC stablecoin and the USDT stablecoin with almost zero fees. The main thing here is that you can have almost zero fees. Because imagine if you're swapping $1 into another type of US dollar and you're being penalized by 3.5% slippage. That would never work, right? And so what Curve specializes in assets that need to be swapped with a very, very, very small slippage. And so I think if you're bullish about a world where stable coins are going to win, then I really think that you need to be looking at something like Curve. Also, if you go back to our table and you say, okay, well, how does Curve work on our table? You say, okay, well, hold on. Their revenue last year was 34 million, which means that they're trading at 30 times their revenue, basically. That's where these guys are trading. But remember that they don't have as many costs as a centralized entity. So that's where Curve trades on the thing. It's got about a $1 billion FDV. And to me, this is something that you really must have in your portfolio if you believe in stablecoins. All right, let's look at some other ones. And the next one that I want to look at is a protocol which by design is actually very similar to what Circle actually does. And remember what does Circle do? You give it a US dollar, it takes your US dollar and it invests a US dollar. And then it gives you a USDC, which is I'm going to say fictitious. It's a tokenized US dollar. It's a representation of a US dollar. Now, there's a crypto protocol which does something very similar. It doesn't do it by investing specifically USD for for a different kind of USD, but that's the 𝗦𝗫𝗀. Now, A lot of people know this as 𝗦𝗑𝗪, but they've rebranded to Sky. So it gets a little bit complicated when you look at tickers and stuff like that. But for the purposes of this discussion, let's just call it 𝗦𝗑𝗪, okay? So 𝗦𝗑𝗪 is another one of these. And if you look at the bubbles today, that's the one that has actually shot up the most. And you got to ask yourself, why has 𝗦𝗑𝗪 effectively shot up so much? Why is it the most popular choice? Why is it the one that benefits the most out of news around things like a stable coin issuer and whatever else? And if you just look at where this token has come from in the last 2 days, let me just quickly go here. It's up about 25% in the last 2 days. And I think the market cap now is just over $1 billion. So the market cap is about $1 billion. What does this protocol do? Effectively, you give it assets. You can borrow against those assets. You give it, for example, I don't know, any asset that you want, Bitcoin, ETH, any asset that you want, and you can borrow the 𝗦𝗑𝗪 USD, and you can basically borrow against it, and they go and invest the assets and actually earn yield. That's basically what happens. And if you look at where this scores here, let's just try and find 𝗦𝗑𝗪 here. So here it is. You can see that this protocol actually makes $359 million, or made $359 million in revenue. Now, how does that rank here? So if you look at 𝗦𝗑𝗪, it's got an FDV divided by yearly fees of 2.85, which means that from a valuation point of view, the 𝗦𝗑𝗪 token is very, 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 very undervalued, right? If you believe in this. And that's why every time we've had good DeFi headlines, every time we've had any of that, what we see is that 𝗦𝗑𝗪 actually responds very, very well. So that's another protocol which may actually benefit from the stablecoin run. The next one that will benefit, in my mind, from the stablecoin run is Athena. And I mean, obviously, I think a lot of people don't really understand how the Athena protocol works. Effectively, Athena protocol takes your money and or whenever you issue a USD on Athena, effectively that USD is a representation of the demand for leverage in the crypto markets. Okay, now I know it sounds complicated, but it's got to do with the lending and borrowing rate specifically around ETH. And what the protocol does is it takes long and short positions. So it's always market movement neutral. And all it does is it captures the difference between the staking yield and the leverage, the demand for leverage in the markets. Now, Athena's been quite suppressed. And the reason why Athena's been quite suppressed is because funding rates or the demand for leverage has been suppressed. But when this chart turns around and when all of a sudden you start to get this chart turning yellow and orange, then what happens around Athena is that there's all of a sudden a massive yield around Athena, and the yields can get pretty crazy. The yields can get like above 20% at certain points on USDC, which is exactly what the model is around Circle. If you think about Circle, what the investors are getting in Circle is the yield that Circle is earning on how they invest your US dollars. And I mean, just a side note on that, the treasury manager of the Circle treasury is actually BlackRock, believe it or not. So BlackRock actually manage Circle's treasury. They will make $104 million from managing Circle's treasury this year. They're also existing shareholders of Circle and made $70 million from investing the Circle treasury in 2023 and 2024. Okay, so Athena is a very similar situation, except what they do is they're relying on a certain type of yield. The Circle is relying on the yield from treasuries, from people like the US government. And Athena is relying on the yield from demand for leverage in crypto, right? And so as soon as the crypto market goes up and as soon as we hit a bull market, so if your thesis is that we're going to get into a bull market right now, then your thesis has to be that the lending and borrowing rates in crypto are going to have to rise. And if the lending and borrowing rates in crypto effectively rise, then you get, then Athena actually goes up a lot because the Athena holders actually get access to that yield. And so I think the next one that is worth looking at is actually looking at Athena. Now, again, when we look at Athena and we look at the thing, you say, is this a yield? Is this a profitable revenue generating protocol? Definitely. In fact, if you look at the annualized or the yearly fees, $317 million. How does that put us relative to valuation? Well, the FDV is $5 million. So it's about 16 times the yearly fees is what Athena is currently trading at. So that just gives you an idea of how these things are priced versus their TradFi competitor. Now, there's a lot of other protocols that actually fit this mold. I mean, one that I'm not as bullish about, to be honest, but probably worth talking about is Frax. Frax is they call it the world's most innovative decentralized stablecoin and DeFi ecosystem. Frax is a stablecoin. It's a collateralized stablecoin pegged to the US dollar. It's effectively very similar to the Maker model, where they take in collateral and they basically mint out a stablecoin, right? Now, the reason why I bring out Frax is because there is another token which is probably worth looking at, and that's Convex. So a lot of people don't know how Convex and how Convex is related to all of this. Effectively, what Convex does in a very, very, very simplified way, a simplified version, is it holds Convex, it holds Curve and Frax tokens. Okay, that's effectively what it does. I think it holds one or two other tokens, but the majority of it is Frax and Curve tokens. And by holding Frax and Curve tokens, not only does it get the yields and the emissions and everything else, but it also controls the voting power. And so people actually pay bribes to Convex, legal bribes obviously, to Convex to actually make decisions, right? And so that's the revenues. And so if you're going to hold Convex, if you're bullish on Curve and you're bullish on Frax, then you should probably own Convex, because then you're getting a basket of those assets. So for me personally, my holdings in that, like I hold Athena and whatever else, and I hold Curve, but I also hold some Convex just in case Curve isn't as good as I think, and maybe a Frax actually lands up going up. And so effectively what I think is going to start happening here is I think we're going to start getting a DeFi run. And I think that DeFi run is specifically going to look at tokens that are profit generating, fee generating, in simple fee generating. When I say simple fee generating, Wall Street needs to be able to understand how the fees actually earn their revenue. So these crazy algorithmic stable coins and stuff like that, I don't think that those are actually going to land up benefiting a lot. I think that the ones that are going to land up benefiting the most are the ones that are the easiest to understand, right? And so like Curve, easy to understand. Athena, easy to understand. Maker, easy to understand. Frax and Convex, I mean, a little bit harder to understand. The research is put in this one over here, which is effectively a leverage play on ETH. I must say, I don't know enough about it to actually be talking about it, but the researchers are pretty bullish on this FX protocol, or it's called F. How do you pronounce it? You pronounce it FX protocol, FXN. And effectively, what this protocol does is it creates, it allows you to invest money and to create leverage positions and higher leverage positions as the price goes up of the underlying asset, which, for example, could be ETH, right? So to me, this is a much riskier bet, and I think that one of the researchers would actually do a full video about it. But I think the idea is to say, look, we're getting news on Thursday, and I think Thursday can be quite a big day, because I think that the launch of the Circle IPO is like quite a big event that the market maybe isn't talking about. And when that happens, I do think that we're going to get some kind of DeFi run, because I think that Circle, if the market holds and everything remains equal, I think Circle is going to actually have a very good debut. I think it's not impossible, because it's so oversubscribed, that Circle goes over $10 billion. And if it does go over $10 billion, then the list of DeFi applications that actually have yield actually starts coming into play. And you've got to be on very, very, very high alert here, because you got to look for the ones that are going to be trading at disconnected valuations or multiples of their valuation, basically, or of their valuation relative to the TradFi competitor. All right, so that is the DeFi narrative. Let me know what you guys think. Let me know what you guys think. I do have some other things. If you want to read more about it, much more in depth, obviously, as I say, you can go to Good Morning Crypto, which is our newsletter. Very cool newsletter. Again, it's free. There's a link below. You can subscribe, get the alpha delivered before the show into your mailbox. I do have one more thing for you guys today, or two more things for you guys today. One is, I told you guys that Sheldon and I are doing a responsible leverage trading event on Thursday. And in order to get people to come to the event, we had to get a sponsor. And the sponsor in this case was CoinW, right? And we're going to go through how to use leverage to actually build portfolios, how to do it in a responsible way. There's a link below for you guys to do it. Best thing though is that I've managed to organize like a crazy deal. Like honestly, like I don't know if I've ever seen a deal as good as this on Banter or on any channel. How it basically works is very simple. You open a new CoinW account, which by the way is a non-KYC exchange, so you can open it anywhere in the world. you deposit $1,000 into the account and you get $1,000. Yeah, so it literally works like this. You need to do 2 simple steps. Sign up through the invitation, make a deposit of $1,000 and get $1,000 super bonus. Like, I've never seen a deal like this. You put in 1,000, you get 1,000. Okay, now this deal is open for like until Thursday. So if you want to take this deal, take the deal before Thursday and don't say I didn't tell you. And if you're going to say to me, but I've already got another exchange account, guys, like, cool, I've also got like 1,000 exchange accounts. Doesn't matter. Just go and get a CoinW deal, put $1,000 in, get the extra $1,000, and then you got $2,000 to trade with. It's like, it's a no-brainer. And then I just want to say again that it's a non-KYC exchange, which means that, yeah, exactly. Say it said it's like 1,000 plus 1,000 equals 2,000. Okay, so you have to use this link. If you don't use this link, you won't qualify. So let me just quickly show you exactly what you have to do. I would hate to, hold on, let me just take you there. Let's go here. I'll just quickly open it for you guys. You can see it. Here it is. Okay, so let's just go here. You go to this crazy promotion over here. And then when you do, you'll get your ID. Hold on, there's too many things going on here. So that's the ID. Why is the CoinW link to open the account not here? It was here a second ago. Let me refresh quickly. How is the CoinW link to? Okay, hold on a second. Let's actually go there. You have to use. Just tell them to put the right link here. Okay, so we'll get the link put in as quickly as possible. You literally you get it quickly. Let's actually get that link in like right now. So we'll get that link in for you guys right now. Open it, and literally what happens is you deposit 1,000 and you get 1,000. Simple as that. All right, guys. I'll see you guys again tomorrow. Until then, trade well, my friends.